life, your term show.
Okay, I am with Peter Dunworth, and I can't tell you, I have had many people very excited to hear from you, Peter. And I think it's with some of your Bitcoin predictions, projections of maybe the fiat dollar price of these Bitcoins. Maybe it's all of this wonderful stuff that gets people excited to hear from you. But I think it's just your depth of knowledge, your finance experience in the past, and the context that you bring to this space and what you're doing with Bitcoin advisors now and how important that is that you're doing with that. But just to begin, can we just start with your journey to Bitcoin? How does, and maybe that is an introduction to people who don't know you, who is Peter and how did you go from your past world into this Bitcoin space? Can you just map that out for us to begin?
Sure thing. And thank you for those very kind words. I guess the road to Bitcoin is usually a bumpy one. I'm yet to meet anyone who says, oh, I read the white paper and I was just all in on Bitcoin and I just went straight in. And this is where my journey with Bitcoin, my background is traditional finance, degree in accounting and finance, worked for BT Funds Management, a funds management business, the old Bankers Trust, was in the mortgages for many years. And then just before the GFC, my father's advisor basically said, you're on the wrong side of the balance sheet, move to advice on equities rather than the debt side, which happened to be quite prophetic that he did that.
Oh, wow.
About 15 years ago, well, maybe 12 years ago now, set up a family office and gave advice, or still do, give advice to some of Sydney's wealthiest families. And about 10 years ago, we started giving advice to those families on Bitcoin. But that was after a 5-year learning curve where my first introduction to Bitcoin was my brother telling me to buy Bitcoin when it was $3. And it's embarrassing to say, but I love sharing this story because we all start somewhere. And this is really important for those who are just hearing this for the first time. But, I was told when it was $3, my brother pulled me aside and said, hey, I think you should buy some Bitcoin. And maybe too much hubris or self-importance, I told my brother, look, that's never going to work. The governments are going to shut it down. There'll be a new Bitcoin. And throughout the next 5 years of talking to him every other day on this, found out that the government can't shut it down. There's going to be no new Bitcoin. Bitcoin is the new Bitcoin. And basically started to help clients allocate to it. But that was a 5-year journey of trying to understand it, that I missed the boat at $3. And I guess the important message that I'd like to share, if you don't have any Bitcoin and you're looking at it and it's circa $88,000, don't have this as your $3 Bitcoin moment that you missed.
It's funny because context is everything. I know with the real estate investors, when we were helping them buy properties at $220,000 in an area just west of Toronto, they are now worth they've come down a bit. So they're worth maybe $750 now. And those investors who bought at $220 are like, I will never spend $750,000 for these properties. I was buying them at $220. And I find Bitcoin has that same thing, like I guess everything in life, where you see it at one price, and then if it goes up in price, you look at it maybe years later, and you were able to overcome this, but you look at it years later and you're like, well, I saw it at $3. It's worth 300 or 3,000 now, or as we talk now, $80 whatever $1,000 US. I'm never going to touch that thing because I missed the boat. So you are interesting in that you were able to drop any ego that you had to really dive in, learn about it, and then acquire some of it at a price that was much different than $3, I assume. It was still pretty good, though. I feel like in 2015, I think now that I'm thinking of that time, you're still pretty good. So good for you.
It's been the best investment of my life. But what's interesting is, and this is where the more I study Bitcoin, the more I'm sincere when I say this, that there's more upside in front of us than behind us. And so, when we're talking 10 years or 20 years' time, we'll be looking back on this moment and thinking, hang on a second, you could have bought Bitcoin for $88,000 and it's going to be the exact same thing of you and I looking back, 14 years and thinking we could have bought it $3. So this protocol is literally designed to go up in value through time. And there's a whole host of factors that underpin that. But this is where the curiosity and understanding, and I think our friend Jeff Booth does the best job of creating that curiosity, because once you start learning about it, you'll realize, oh my goodness, well, don't take our word for it. Go and figure this out for yourself and come to the same conclusions that we have. And this is where I think amongst any Bitcoiner, we are absolutely thrilled to have our beliefs around Bitcoin challenged, because we sit here in some sort of a bubble trying to understand and make sense of it. And the number one thing I'm trying to figure out is, what are the threats to Bitcoin and what is going to undermine my thesis around Bitcoin? I don't care about being right about Bitcoin. I want to know what I've got wrong about Bitcoin. That's the most important thing I can do with any investment. So,
and you want to do that because you've made, obviously, I don't want to speak for you or put words in your mouth, but you've obviously made an allocation to something that you think is important, that has become something valuable to your personal life and your family's life. So now you want it to be challenged in case you're looking for incorrect analysis of your own thesis, so that you can reallocate if you've made a mistake, I would imagine. So so when you went, this is interesting. So we're already on. After question one, I'm already off my agenda with you, which is good. Yeah. What were the pillars then, or when you are speaking to some of your clients, what are one or two or some of the pillars that you find yourself repeating over and over again as to the reason to allocate, or to the price projections you think Bitcoin may end up hitting in fiat dollars? What are some of the things that you find yourself repeating over? Is there a general theme to the answer?
I think this varies through time. So the initial conversations we had with clients, the regulatory framework was very different to what we're working with today. There was huge regulatory and compliance risk with advising clients to buy Bitcoin 10 years ago. There was no framework for it. It wasn't a registered investment asset. Being a financial advisor or investment advisor, there was no framework for giving advice on that. So we had independent legal counsel prepare 4 pages of disclaimers and bona fides to say, look, best efforts, but it's all care, no responsibility. And we drafted that. So that was a very different conversation to start with. And that conversation really was around asset allocation and weighting to Bitcoin. So it was, look, let's put 2% of your investable assets into Bitcoin, 10 years ago. And it was the framework for assessing the risk on it was, we can deal with a catastrophic failure when we apply 2% of your net assets to Bitcoin. So if it is a catastrophic failure, it goes to zero, then that's a loss we're all prepared to live with. And the clients agreed. They said, yep, great, we can live with that. And it was sort of framed as a bad day in the market or equivalent. Now, that bad day in the market looks like down 5%, whereas 10 years ago it was down 2%. So maybe that allocation has changed. And so what's really interesting in the last 10 years is Bitcoin has now become an asset that you have to have in the portfolio, not one that you shouldn't have in the portfolio. So there's been a complete 180 paradigm shift of investors wanting to have exposure to it. Now, the weighting is the different, is the real question as to how much they want. But the real risk now is not having it in your portfolio as opposed to having it. So this is where there's been a seismic shift in the advice industry, and we've seen the institutionalization of Bitcoin with, the ETFs, the Bitcoin treasury companies, Bitcoin miners. All of those are now listed options that you can get in a regulatory wrapper that you're very comfortable with if you've never seen or understand Bitcoin. So I still play in the traditional side of Bitcoin where I want clients to self-custody that. But the frameworks that we've got for accessing exposure to Bitcoin have proliferated. And this is, I think, on a risk-adjusted basis, this is the best time to be buying Bitcoin, not 5 years ago.
And why would that be? Why is that?
There's a whole host of reasons, and I'll just sort of list them from the top. Firstly, we've got support from the most powerful government on earth. The US government now endorses Bitcoin. There's talks of them having a strategic Bitcoin reserve. And my expectation is that by August next year, there will be one. And I know that's an opinion that's...
Yeah, it's a bit of a controversial take. Yeah.
We now have regulatory cover from the SEC. Up until the recent US administration, we had a very hostile environment regime on the regulatory front to Bitcoin. We had no regulatory clarity. We had the CBOE, Chicago Board of Options Exchange, classify Bitcoin as a commodity, but we had no classification from the SEC. So how were advisors meant to advise on this? It was very difficult. Is it a commodity? Is it a network? Is it a technology? Is it a stock? Is it you name it? There was no clarity. We now have that. And so I look at this and think, when you peel back all of these things and put it into context, we now have a government that's supportive of Bitcoin. We've got multiple governments worldwide buying it. We've got regulatory clarity. We've got the endorsement globally from the investment community that there is some space for Bitcoin. Now, I expect all of those things to be ramped up through time and more people to really understand that. But you and I, who are at the coalface of this, understand what these changes mean. But it's at the top end 1% to 2% of people who understand that. And it's going to take the next 5 years for the rest of the world to filter through that information and really understand that this is here to stay. So I think Bitcoin has been dramatically de-risked. And the endorsement by the world's largest fund manager or asset manager in BlackRock is a huge endorsement. And this is what changes things dramatically. And that single endorsement right there now lets the entire investment advice community advise their clients to buy Bitcoin. And that is a complete game changer. You're now going to get ridiculed for not having it in your portfolio, whereas prior to January last year, January 2024, you were ridiculed for having it.
Yeah, it seems a lot more. It's a lot more acceptable now to add it. And I guess some of the arguments that I've been using over the last few years, I didn't even hear you bring up, which to me are the debt position. Just the economies all around the world are soaked in so much debt at this point, and that we know they're going to keep printing fiat dollars to pay for the deficits that these governments need to run. And I lean on that maybe too heavily. I'll bring that up as like, hey, this is almost the reason that you want a finite digital scarce thing, because the fiat dollars around you are just going to multiply to no end. That this is kind of the asymmetry to this. The upside seems like I don't know how many dollars they're going to print. I absolutely know how much Bitcoin there's going to be. I like owning something in that type of scenario. Do you bring that up with some of your clients, or is that just like an accepted, we don't even need to discuss that anymore?
No, I think that's a very important point. And it's probably the most important thing is you need to understand who you're talking to. And so for your clients, I think they understand debt and how powerful a tool that is.
Peter, I'm very stubborn. I just say the things I want to talk about, and I do a very poor job sometimes of understanding what my client needs to hear. But yes, I think you're absolutely accurate. But so I'm cutting you off. Go ahead. Sorry.
So for that reason, with your clients predominantly understanding the debt markets and property and the leverage and what leverage brings to ongoing returns, I think that's really important. But another sort of peel the layer back, if you're talking to clients in that capacity, I look at most of the returns in property in the Australian market. I think Canadian market's the same, and the US property markets worldwide. The real returns in property are driven through capital growth. And then when you peel back, what are the capital growth drivers? You look at two key things. It's demographics and then credit growth. And I look at that and think, to your point earlier, when you said the world's saturated in debt, we're choking on our own debt. We can't get any more debt. I look at that and think, well, if credit growth, which basically credit growth is dead in Western countries now, because we've got a slowing or declining per capita GDP. Per capita GDP is the key indicator for credit growth moving forward, because that basically tells us we can afford more. In Australia, we've had a declining per capita GDP, the worst out of any OECD. That
I'm sure. I think Canada's challenging you, but sure, I believe you. But we're right there with you.
And the problem with that is, as a guy who loves property investing, is that puts limitations on the credit growth that we can have in our respective countries moving forward, which means that's at least neutral pressure, if not downward pressure, on the capital growth of these properties that we're seeing. And if you're not getting capital growth out of the property investments that you're making, when you've got leverage on it, and leverage is a key here, then why are you buying property? And then that sort of leads us to the conversation where, well, if you're not leveraging, and property investment has sort of an asymptotic curve where you cap out on a serviceability scale, what can you invest in that has a better outlook for capital growth and doesn't have an asymptotic curve that's going to limit your servicing into the future? And this is where we come back to Bitcoin.
Okay. Yes. And I'm a Bitcoiner. So I am buying what you are selling right now. But to push back on you just a little bit, because the real estate market in Canada, I think Australia is very similar, is such an important piece to the economy and the overall GDP in this country. Could the powers that be not just say, okay, we do want the credit growth to expand. Amortizations that have been capped here at like 25, 35 year range. I think Australia's ahead of us. Well, let's just go to 50 years, Peter. Let's go to 80 years. In fairness, everybody should own a property. Let's go to 100 years. And me, the politician, thinking this way, I'm thinking, I just want real estate activity. If I'm creating someone who's going to be a slave to that debt for the next 50, 100 years, I don't care. I'm not saying that's right, by the way. I just want the economic activity. I want credit growth. Let's just push out these amortizations to drop the monthly payments. Everybody can keep the party going. We can drive up prices. And there you go, Peter. I've just I can make more credit happen. What do you think when I say that?
I think we're both, to hear that, you're admitting what the problem is.
Yeah.
So if a client pushes back to me with that, it's like, you don't have to sell me. I'm already sold on Bitcoin.
Yeah. Sure. All those new dollars. Yeah. I guess I'm just trying to hit on the point. Could someone who's debating whether they should go into real estate more than Bitcoin at this point see a way for capital, or credit growth in the real estate space through these other levers that they can pull,
This is going to be really unpopular, but there's a whole host of resources that they can, or tools that they can put in place which can keep this party going for the next 20 years easily. Mm-hmm. And this is where our respective countries are very similar in that our entire country is built on, in Australia anyway, is built on the property sector. Mm-hmm. Most of the wealth is in residential property, obviously some commercial as well. Our banks make up nearly 40% of the Australian Stock Exchange, and our banks are literally a leverage play on the Australian residential property market.
Yeah.
They're the most profitable banks on earth because they're leveraged to the Australian property market. And then in addition to that, we've got probably another 10 to 20% of the Australian Stock Exchange is listed property REITs. So we're up to maybe 60% of the stock market is dedicated to the banks / residential property. And so every lever in the country, whether it's the household, whether it's the government, local, state or federal, or alternatively, our listed companies are all leveraged into this Australian property market. So I don't want to bet against the Australian property market because I think that's complete madness.
Sure.
Because
the powers that be,
they're going to keep that party going. Yeah. I just want to find something better because I look at the risk building up that no one wants to acknowledge because it's not in anyone's best interest to say, hey, look at this elephant in the room. We really need to look at it. It started shitting in the corner.
This doesn't look good.
Yes. Yeah. So I want to find something as a bit of an escape hatch, an alternative, something with much better fundamentals than, say, the Australian or Canadian or US property markets. And this is where, purely on a demand-supply curve, I look at Bitcoin and think, well, let's look at our respective countries and think there would be less than 1% homelessness in the country, would be my fair estimate. I think it'd be less than 0.5%. What's interesting, though, is that I believe that Bitcoin is just as important, maybe a little less important than oxygen and water and food, but it's really important, but we just don't know that yet. However, there might be 5% of our populations really understand Bitcoin and actually have any of it in any meaningful capacity whatsoever. And so I look at that and think this is an inverted supply-demand curve relative to the property market. Property market, everyone knows what you're getting there. You're getting basically property, you're getting the whole country, the government, the companies, the persons, all rooting for property to go up. And it's completely understood. There's no misunderstanding with that asset whatsoever. Bitcoin, on the other hand, I believe is far more important than property. It's going to demonetize property, and only maybe 5% of the population really understands what that upside potential is. I look at that and think, well, that's far less risk associated with investing in Bitcoin than investing in and taking out huge leverage on property.
Yeah, well,
the property investment moving forward doesn't really gel with me anymore.
Yeah, no, I hear you. It feels like that game. And to your point, even if they pulled those levers I'm mentioning, it's just making the problems worse. All the problems that we're seeing exist, they all get worse under that scenario. What are some of the? I was going to ask you this later, but I'm probably just going to throw this in now. What are some of the price projections in Bitcoin that you share with some of your analysis? Do you map this out? It feels like when I was kind of researching into you and listening to you, people seem to really enjoy some of your price predictions, Peter. So can you share some of your thinking around that and just why you're thinking the way you are?
Sure. There are two sort of frameworks I've got for this, and they come up with outrageous numbers. And this is where I'd say input your own numbers, just critique the thinking around how we create a framework for valuation when it comes to Bitcoin. But to me, understanding what Bitcoin is, it's the first money that can't be debased. I think it's the best means of exchange we've ever had because it's censorship resistant, it's seizure resistant, no one can take it from you. There's absolute digital scarcity. There's a whole host of things which make this better than any form of currency that we currently have. The first framework I think of in thinking about this is once people understand what this is from a means of exchange perspective, we're going to have every transaction globally denominated in Bitcoin when the world figures this out, because we don't want money that's debasable. We don't want money that's depreciating in value to the tune of 10 to 15% per annum. We don't want the ability for a third party to just print more of it because they've got a hole in their budget that they need to fill. All of this seems so simple, and the problem is that most people don't really understand what the problem is. But when you understand what the problem is, you're like, well, I don't really want to accept that. I would want something that is censorship resistant, seizure resistant, has absolute digital scarcity, and I know exactly how much of it I own that I can never be debased on. So looking at this from a means of exchange perspective, there's roughly about $7 trillion worth of value traded on a per day basis, on a daily basis. So assuming that $7 trillion gets traded on a day, there's, are we up to 450 Bitcoins per day are minted through the Bitcoin mining process today? So if you divide 7 trillion by 450 coins, which are minted on the day, which is your new daily amount of Bitcoin that's created, you're going to have a number that comes up close to about $15 billion per coin in order to facilitate that daily global trade.
Mm-hmm.
Now, ironically, that's the conservative estimate for this, because the other way of valuing this is a framework that I put together called the world's first triple point asset, in that Bitcoin is the first triple point asset, in that it's the first store of value, means of exchange, and unit of account all in the one asset. And so if you look at how to frame it from this perspective, it comes up with a much bigger number, which sounds crazy, but it's not about putting out a fantastic number to sort of salivate on.
Sure.
It's about thinking about the process on thinking how to value this. And this is where I'm open to any pushback on the framework for thinking about the valuation that we want to put on this. But if you look at the store of value function, that is on a global basis, the basic function of store of value reverts to gold. Gold is the king of store of value. It has been since Jesus was a boy. There's roughly $30 trillion of market cap that's dedicated to gold. We're simplifying this because the stock market and the real estate market has been corrupted into a store of value now too. But for that framework, or this framework, let's just assume it's a $30 trillion store of value in gold. Now, Bitcoin's better because there's absolute digital scarcity, whereas gold has an inflation rate of about 2 to 3%. We've got a money that has absolute digital scarcity, and that is absolutely critical. And most importantly, we've got a store of value that cannot be seized by anyone. This is a huge, huge improvement on what gold is. And we also have one other benefit, which is way better than gold, in that it's everywhere and nowhere at the same time. Because it's digital, we can transfer it over the internet. Now, with gold, you can't do that. So Bitcoin is a much better store of value than gold. From means of exchange perspective, sort of explain that this is a much better means of exchange because you've got censorship resistance, you've got seizure resistance, and most importantly, you're not getting debased on that monetary, that means of exchange function whatsoever. The global reserve currency is the US dollar. That accounts for about $100 trillion worth of value now. And I'm saying that Bitcoin can dislodge that market as the preferred means of exchange. It's not going to happen over the next 10 or 20 years, but over the next 30, 40, 50 years, I'm certain of it. And the final function of money, which I think Bitcoin is going to assume, is the unit of account. And this is where Bitcoin gets really interesting because taking a quick side note here, Bitcoin's the first accounting upgrade in 1600 years since Da Vinci was around. And so what this represents is that the innovation that happened 600 years ago was we went from a single entry ledger system, which is complete dork talk in accounting terms, to a double entry ledger system. And this allowed for a much greater description of what a transaction was and how to account for things. This led to a global boom, the last golden age that the world saw. And now we have the first accounting upgrade in Bitcoin to a triple entry ledger system, which is an infinitely better upgrade to the double entry ledger system. And so I look at this and think, if we're using the double entry ledger system for unit of account now, we're going to upgrade our accounting system to Bitcoin. And that market, that total addressable market of unit of account is somewhere between $1 to $2 quadrillion. Now, explaining all of that and confirming that Bitcoin is a better unit of account than our double entry ledger system, it's a better medium of exchange than the US dollar, and it's a better store of value than gold. What most people look at, and this is a simple framing on this, but I think it's incorrect, they look at this and think, oh, well, we just add store of value, we add medium of exchange, and we add unit of account, and we come to a total value of around $2.1 quadrillion. And if we divide that by 21 million, that gets us $100 million per coin. Now, to me, in understanding economics, that's not how economics works, because that's okay if you've got 3 different assets for each function of money. But when you have one asset that rules them all, that has to serve each function of money at the same time, rather than adding those values together to get your total addressable market, you really need to compound those values together, because for the first time in history, you now have the unit of account, i.e. Bitcoin, competing with unit of account, competing with store of value, competing with medium of exchange. So there are 3 battles that are going on at the same time. And when there's competition for something, what happens is that price goes up dramatically. And this is where most people, I think, fail to see the size of the market available in front of us, because that rather than compound those values together, they simply add them together. And my, I guess, key point about this is, no, this is a compounding effect. This is an exponential that needs to be addressed. That's how we get to a multi-billion-dollar Bitcoin. Now, we're a long way from that information being evenly distributed, but on looking at where we are now and talking about the $3 Bitcoin where we were, say, 15 years ago, I look at this and I think, when the rest of the world figures out what I've just said, we have multi-billion-dollar Bitcoin, and there is your opportunity, or the equivalent opportunity, to be able to buy Bitcoin at $3, except you'll be paying $88,000 today.
Hey, a quick announcement in the middle of this podcast. Applications are open for the Platinum 2026 group. This is a mastermind group where entrepreneurs get together and share successes and challenges, and we all brainstorm together on how to grow our businesses and improve our lives. We go over things like this business building blueprint that we've shared over the years. We go through some mindset stuff, time management strategies. We cover it all. And a lot of the things Nick and I learned from growing Rockstar from 0 to an 8-figure business, we cover all of that in the Platinum group. It's for entrepreneurs and people who are running their own businesses and really want to take the next step with their business. Applications are open now. We do not accept everyone for that. It is a limited group, and over half the group is already full. So for the next few weeks, we are taking applications. You can listen to some other Platinum members have said right now. We're going to share that, and you can go to rockstarinnercircle.com/platinum to learn all the details and grab your own application.
I'm 50 years old, and I've probably done coaching for the last 20 years, various organizations. No organization's ever made me more money than the coaching here.
Places where I need direction or some refinement or feedback, it was the opportunity to get that from other entrepreneurs, other investors.
And the success from Platinum has really been the support. It's people to hold me accountable.
There's a lot of value in going at it with a group instead of feeling like you're going at it alone.
From a marketing perspective, master marketers.
We've been able to buy property internationally in a couple of different places. What seemed like an unattainable goal to travel or be away from my business for a month at a time has turned into something that we do every single year now.
For me, it was just such a great experience, and I'm just glad I did it. Really, today is the last day, and we're going, we're so sad it's over.
Being a member of the Platinum Group has certainly helped me live life on my terms.
And we know that for us, being a part of this group going forward means that we can expect continued success for our business. So it gives us that confidence moving forward to next year.
That's a lot of great info packed in there, Peter. And I think, because I'm just thinking about the journey of myself or what other people I've worked with go through. And I think you can get to the store of value, once you start to understand, this is really a superior store of value than anything else that I've come across in my life. It's real property that I can also just directly own. I had that realization on the store of value front. I was like, wait a second, have I ever really owned anything else in my life? Because Bitcoin, I can own directly. Whereas everything else, I have to pay. So if you go to property, I have to pay some tax, or I'm going to pay someone else. And I'm never really truly owning what I think is this really great store of value. And then on your medium of exchange, I don't think people realize that it's a completely separate network. There's a bunch of lunatics out there, myself included, running nodes that are maintaining a completely separate financial network that you, the average person, can own a piece of, because the settlement unit of that network to interact with it is Bitcoin itself. So Bitcoin's a network, and you can own one of these Bitcoins in the network yourself directly. It would be like today owning the equivalent. It's probably not a perfect example, but if anyone's familiar with wiring money around the world and you put in that SWIFT code, you're using that SWIFT network. Imagine being able to own a piece of the most powerful monetary network we've ever seen, which is Bitcoin. You get to own a piece of that. And then when you said unit of account, when you graduate to the place where you start thinking and pricing everything in Bitcoin, it is really powerful when Bitcoin becomes your personal unit of account. And then to extrapolate it globally, and I've never really thought of those three things competing with each other on a global scale. Yeah, it's a powerful case that you're building there for the next few years. And I guess that's when you're talking to your clients, the asymmetry of this information is that you have this information in this thesis, and you're just thinking at 88,000, it's almost like $3, basically where we're going. We're just so early in that information. Okay, so let me ask you this then. What are there any current threats to this thesis that you've just kind of mapped out here on where this might all go? I think some of the ones circulating now, in 2020, it was government is going to, the first one I heard was government's going to ban it. That was still circulating 2020. Right now, it's the anonymity to it is it's not it's not anonymous. Bitcoin's not anonymous. You're hearing that a lot. And the other one is quantum computers. I think those are two that I'm personally hearing. I don't know if that's different than what you're hearing, but those are two that I'm hearing. Do either of those two things currently, scare you or make you change your thinking on anything?
No, on the privacy front, I've had some great conversations where I think the layer twos do a much better job of improving privacy. So I think that is going to be solved on a worldwide basis very easily. Not very easily, but it's solvable. It's a solvable problem that we're familiar with. When it comes to quantum, I can't help but get past where I feel like we're in the fusion stage. This just, we're 10 years away from getting fusion, and we've been saying that for the last 50 years. If I look at and have a chat to some guys who are materials engineers, the limitation is with material engineering. We don't have the materials to create what's needed in that capacity that comes anywhere close to providing the number of qubits that is going to damage the Bitcoin network. And so when I hear this and see this, firstly, I think we're miles from it, and a lot of people don't really comprehend what is required to get there. And secondly, if it is going to happen in a number of years, well, that's a relatively simple upgrade to the network, because we can upgrade the software on the network that endorses all of the encryption or backs all of the encryption to the network. So I look at this and think, well, again, it's a solvable problem that we can solve for. And I think Preston did a great interview recently with an Aussie guy, Charles, talking about quantum and how to.
Yeah, I saw that. I haven't listened to that episode yet. Okay.
It was very good, but I think a lot of those problems are taking very positive outcomes that aren't yet to be proven out on the scaling of this qubit and quantum. At the same time, not in this, because there are a whole host of remedies that are talked about in there, but I think the remedies do exist to solve for quantum. And this is where those two big things that I hear as a reason not to buy Bitcoin, I look at that and I think, no, the second you do a little bit of work on this, you'll realise that those concerns you've got about quantum or privacy, they're much smaller problems than not having Bitcoin in your portfolio.
Mm-hmm. Yeah, good point. Okay, that's a nice way to frame it. And it's interesting. It's easy to say no to something and just kind of dismiss it the first time you hear some kind of FUD about it without putting in a little bit of work. And I feel like that's where most people still are. Okay, I have a question for you. We're starting to see some of our real estate clients in apartment building space sell some apartment buildings for Bitcoin. Have you been seeing that with any of your clients? Is the first I've seen some larger real estate players sell off some of their portfolio. We have seen some clients refinance single family homes and duplexes and triplexes and use the cash flow from those properties and the refinance to go and then buy Bitcoin. So they're keeping their property, refinance it, extract some equity, use the cash flow to cover the extra debt that they have on that property, use the new credit that they've been able to pull to buy some Bitcoin, the new dollars. But I'm just now starting to see some people sell apartment buildings outright and say, you know what, I'm in my 50s. I've managed to accumulate some wealth here, but I don't want to hold these apartment buildings anymore. Have you seen that yet? We talked about before we started recording briefly, but I can't remember if you said you had also seen that.
We see this on a daily, if not weekly basis.
Oh, you do? Okay.
Across the board.
And what? Can you just share some of the thinking between some of the clients what's the kind of thoughts that they're sharing around that?
There's a number of different conversations that we have, and I'll sort of label maybe the two major ones because I think this will hit home for a lot of our investors. So a lot of the property investors who have been successful are typically 50 years and over because property takes time to really build wealth and compound, yes. Right?
Yeah.
So, but they're typically successful investors. They've done really well in the property space. They've got family, so they've got children that they're deeply concerned about. And the conversation often talks about the family home that they're owning or an equivalent style of investment. They might have 3 children, and the conversation very quickly gets to, do your 3 children have the ability or the savings right now to put down a deposit on your family home? And more often than not, the answer is no, they didn't. No. And these are good kids. They've done everything they've asked. They've gone to school. They've done uni. They've got their training. They're in their professions. They're not sitting on the couch in the basement. It's not like that. So collectively, they don't have enough deposit to purchase the family home. And then the next question is, collectively, do they have the income to service an 80% debt on the family home? Is this possible? And the penny drop, it's the realization of, oh dear, we're in effectively a Ponzi scheme, that the generation coming through hasn't been given the opportunities to get to a level of savings, get to a level of income that allows them as a 30 or 40-year-old to go and purchase the family home. That's just not the case. This is sort of a really perverse quirk of the current system that we've got, that for the first time ever, the generation coming through is going to have a worse standard of living than the generation in front of it. And this is really disturbing. And when you have that conversation and the light bulb goes off that, oh my goodness, 3 people in my family don't have the ability to purchase one home, let alone 3 homes. The penny drop happens of, oh my goodness, this asset something is amiss with the valuation on this asset. It is way overvalued for the relative utility. And this is where, without going too deep into it, property stocks, really, they've been monetized as a way to preserve value through time because the money's done such a poor job of doing it through time. And so we're getting to the point where we've maximized the monetization of these assets in our real estate and our stock market. And we're basically at peak credit. So this is the problem that we talked about earlier, is when you're at peak credit, you need that per capita GDP to continue growing. And if you don't, then credit growth is going to slow. And if credit growth slows, then the ability to purchase these properties is going to go down, the values go down, and it's kind of a cascading effect. So I look at this and think that's probably a primary conversation we're having with our older clients who realise and look around at the property market and their property portfolio that they're holding and realise that this is not sustainable. And so they're looking to, how do I preserve my wealth through time in an asset that's going to be good not just now but into the future? Because every time I chop and change, I've got a transaction cost. In Australia, it's a 25% capital gains tax. In Canada, I presume it's probably similar to that.
Similar, yes.
Yeah. So you don't want to be changing assets through time too often, because you're giving away 25% of your equity every time you do it to the government in the form of taxes. So then the realisation comes in, well, what's an asset that's going to be here for the next 2, 3, 4 generations that I don't have to think about? And then you start peeling back the layers on, well, what's an asset that's completely misunderstood? What's an asset that everyone's going to need in the future? And what's an asset that's going to protect us from this demonetization of the traditional assets that we're looking at? And this is where I look at Bitcoin and think, well, here's the solution to all of those problems that you've just raised. And once people see the facts in front of them, it really is a no-brainer decision. It's just apply yourself.
So, okay, that's interesting. Thanks for sharing all that. So when you're speaking to clients, other than, we're looking at the property market and saying, okay, we don't know, as you discussed earlier, if it can keep going. Can you still access credit? Are these are these economies and are the citizens of countries all around the world just so heavily indebted that really this game cannot keep going? Is that the primary thing that you're looking at to say we need to get out of the old system and into this new asset class, money, however you want to call it, Bitcoin? Or is there another thing that you're looking at around the world in the financial system right now that I haven't asked you that is like cueing to you or, suggesting like, oh my gosh, like we really need to kind of move things? Or is that the big thing that like, we just can't keep taking on all this new credit? Like it's just not possible. Am I missing something that you're looking at regularly? I'm just curious.
No, I think the debt is a real problem. And we'll probably talk about this in a little bit, but the problem is not so much the debt. The problem is the collateral that supports the debt. And so everyone wants to talk about the debt being a problem.
Yeah.
But if we have an example, a micro example of a transaction between you and me, let's just say I want to borrow $100 from you and I give you my iPhone as collateral for that loan. You have over-collateralized the loan to me, which means you have no risk. So if I don't pay the $100 back plus whatever interest you've charged me, you simply sell my phone for more than $100 or whatever's owed, and because it's worth, call it $1,000, you know that you can get back $100 in your sleep. You could literally put up a sign out at the front of your house. You'd have someone stop to buy that phone. It'd be so easy to solve. The problem we've got is that the debts that we've incurred and created have no collateral backing them. And when I say no collateral, I mean no collateral.
Nothing.
There is no there, because when you start selling these assets en masse, it literally is a house of cards and the whole value comes down. And here's an interesting side note. I spent, on the weekend, about 15 minutes talking to AI. Do we have a debt problem or a collateral problem? And the AI basically came back to us and said, we've got a debt problem. And I said, okay, let's go through that. If I've got a debt problem, surely I can solve that debt problem by just selling the collateral that is attached to it. Yeah, that's good, but sometimes you can't sell it for what it's valued at. I was like, well, that suggests we have a collateral problem then. And I went back and forward. It took 15 minutes to drum into the AI's head that we don't have a debt problem. We've got a collateral problem. And this is the problem that we don't understand at a mass scale, because the government's printed all these debts with nothing backing them. There's no collateral there. There's no there. And so I look at this and think, this is where Bitcoin really can step in to solve that problem that we've got. And I want to be and back to your point about how do we frame this, what do you look to, and the rest of it. I'm trying to take clients on a 10-year journey where if I can get them a 5 to 10% allocation of Bitcoin today, that's going to solve all of their problems in the future when it comes to a devaluation or demonetization of the property market. That solves all their problems. And all they need is a little bit of exposure now. And I know once they get a little bit of exposure, they're going to learn a lot about it. And then it's just a one-way valve. It never comes out.
It really is a one-way valve. Okay, and the reason that you place so much importance on the collateral problem is that you're just thinking, I'm just trying to pick up on the nuance here, because I always talk about the debt. Like, I'll just go on and on about the debt. But ultimately, I agree with what you're saying, that these governments have just printed all of this with no collateral, so that if they're issuing new debt, really the only collateral is that it's going to be paid back. But if there's nothing there, they just have to print the money to pay it back. And if everyone's doing this en masse, you just get hyperinflation episodes popping up all over the world. And if the house of cards collapses in one area, starts collapsing in Asia somewhere, it can end up coming to the shores of North America or Australia kind of overnight. I never really thought about it that way. Sorry, I'm just taking a moment here because I just talk about the debt so much, but it's just that they've just printed all of this or issued all of this debt with nothing behind it. And at some point, people might realize and say, wait a second, there's nothing. If I have to get paid back, there's nothing to secure that with. I'm actually pretty screwed if I don't look at the financial system and like what I see. What is the good collateral to get? Holy shit, what's this Bitcoin thing? I better get some fast. Is that kind of your line of thinking?
Yeah, because, it's only a debt problem if you can't get your money back.
Yeah.
And all of these bonds are basically worthless because you're not getting your money back. And you're not getting your money back. You might get your money back in nominal terms, but in real terms, you're not going to get your money back. And this is where I don't want to be diluted. And this is the real problem that we're facing is our governments are printing 10% more money each year.
It's pretty scary what you lay out there, Peter. It's pretty scary when you think of what you just said. But sorry, keep going.
Yeah, it is. It's terrifying. But I think it's really only terrifying if you don't know what to do or how to protect yourself.
Sure.
And the way to protect yourself, I think, is to have a decent amount of your assets exposed to Bitcoin. And that is a way of protecting yourself from the system. So I look at this and think, we're getting robbed of somewhere between 10 to 15% per annum on the value of our money.
Sure.
And I dare say that's the thing that's underwritten the property markets that we're in over the last, say, 20, 30, 40 years, because at the same time that property prices have gone up through the roof, they're very highly correlated to the amount of money that's been printed in our economies.
We measured it in Canada. It goes along with M2 in this country so well. Like, it's just it marches along with M2. Whatever M2 grows, the property market grows. Like, that just seems like and people kind of want to fight it, less so now, but it just seems like, the correlation there is just bang on.
Yeah. And that's the problem. So if you're, and this is the problem about statistics, if you're happy with an average return, no problem. Just keep doing what you're doing. You're going to need 15%, per annum just to tread water. But if you want to get ahead in life, if you want to move up that economic scale, you're going to have to find an asset that goes or is substantially better than 15%.
And it's interesting that when you map it out like that, because when you start investing in real estate in Canada, if you put down 20% and you get like the 7 to 8% kind of historic from 1969 to today, it's about 7-8% compound annual growth. At first, it looks pretty interesting. Put 20% down, get 7% return. It's like 35% return. But as you pay off the property, as you own the property, and there's less and less leverage on that property, your return, you don't think, like, I never used to think of that. I'm like, oh yeah, this is great. Like, I'm getting, I put 20% down, it goes up this much. It's a great return. But as you own the property for 5 years, 10 years, 15, 20 years, if there's less debt, less leverage on the property, the whole beauty, I don't know if beauty is the right word, but the whole idea of kind of outpacing the debasement goes away.
Yeah.
And I never really thought about it that way. I always just thought,
that's your asymptotic curve, like it caps out.
Exactly. And when that hits you, it's like, oh, this isn't. And now I just have like all these headaches with the property, and now I'm forced to go refi. I have to refinance, because if I don't refinance and leverage up, then what's the point of dealing with all this stuff? Because I'm not really getting ahead. The 8% is not getting me ahead at all. That's just paying I'm keeping up with the debasement. It's horrible.
Yeah, and that's the funny thing about the law of small numbers, right? When you start in that first year, you've borrowed 80% of the value, and you've only got 20% equity in. That goes up 10% in the year. You've returned 50% on your equity. It's like, wow, I'm a genius. But after the next year, it's 40%. Third year, it's 20%, and then you're down to, oh, hang on a second, I'm getting 8% a year. It's like, this is killing me. And I've got debt servicing, I've got maintenance issues, I've got tenants to deal with. There's a whole host of headaches that you can deal with. But this is the beauty of Bitcoin. There's literally, once you have that custody in the way that you're happy with, there's no headaches, there's no tenants, there's no maintenance. It's getting to leverage the smartest people in the world to build out the Bitcoin network.
I want to ask you your thoughts on advising clients on how to custody and some of the best practices around that. But before I get there, just about retail and institutions, what's your take on institutions? Do you have a view if they're like hurting the Bitcoin space? Are you okay with institutions getting into it? Did you think it's just inevitable because it's the best collateral, best money that we can find, so that it was going to happen? What's your current take? Because that's a controversial kind of idea for a lot of people.
I think it was inevitable that institutions were going to be here. They love volatility. Bitcoin's the most volatile asset. So we're going to have every permutation.
Depending on when you're listening to this, we just went when it touched, I feel like it was 126,000 US like 6-7 weeks ago or so. I've lost track. And now we're at like 80 something. And I feel like last week it was pure, the sky is falling. I had someone email me in the subject line. It was just Bitcoin, period. And then it was inside the email, it was like, is this still worth holding? Question mark. That was the entirety of the email. I was like, last week was intense.
It was.
I wrote a paragraph and they're like, that was a world-class answer. Thank you. I'm good. So they're holding, but I'm like, whoa, we gotta help these people here. Yeah. Anyway, I cut you off again, Peter. Institutions, inevitable.
On the institutions, it is inevitable. And this is where I probably differ from most people, in that in order to be the best, you've got to beat the best. Mm-hmm. So you have to be adopted by the institutions, and you've just got to beat them at their own game. But I look at this and think Bitcoin is like it's a nice to have for the institutions. They're going to look at it as a little plaything, and they're not going to realize they've raised a monster that's going to eat them.
That's how I feel. Sorry. That's exactly how I feel. Exactly. Yeah. You just let the Trojan horse in the front doors.
Yep. And you supported it, you loved it, and you don't have a clue how you can control it, because you've got no way of controlling this thing once it's out. So it's for the betterment of humanity. So I'm thrilled about that, but it's going to chew up a lot of banks, and they're going to get turned upside down, and a lot of institutions are going to get wrecked on the back of this.
Mm-hmm. Yeah, interesting. It's funny because we just came back from El Salvador. We were at Bitcoin Historico last week. Yeah, I'm losing track. And we had never been to El Salvador before. We went, most of the family went, not all of the family went. And it was just wonderful to see a country embrace it. So never mind an institution. Like everybody we were talking to was familiar with it. We went down to Bitcoin Beach in El Zonte there, and everyone was familiar with it. Of course, I guess in that area, but even in San Salvador, people were talking about Bitcoin and very encouraged by it. It gave you a lot of hope to see a nation really embrace something. It was. And then you see the medium of exchange. To your earlier point, we were buying coffees with it and food with it, and everybody was accepting it. Easy, was not complicated. Mostly using the Lightning Network, like you were saying, a layer 2 that kind of solves a lot of issues for speed. So it's just fascinating to see. Okay, so on the institution front, you're fine with it. You think it was inevitable to be the best. You got to beat the best. I like that.
Yeah.
All right. Okay, so on custody. Can you just talk about that? What, do your clients keep self-custody, or is it split ETFs and self-custody? And can you talk about some of the best practices you like to see for your clients?
Yeah, I love to see self-custody Bitcoin, and I want clients to be able to self-custody Bitcoin in any size that they want to without being fearful of losing it. And so our entire work around the Bitcoin Advisor works on that exact premise, that we want anyone with zero knowledge of Bitcoin to be able to buy and self-custody Bitcoin without any fear of losing it. And this is why we've developed collaborative security that enables clients to self-custody their Bitcoin. And most importantly, there is no single point of failure that they face. So this gives clients the peace of mind to know that regardless of what they do or how badly they mess things up, they're never going to be able to lose their Bitcoin when they work with us, because we put them in a framework that ensures there's no way they can lose that. And we do that by collaborative security. So we use multi-sig. We have clients set up an account with their multi-sig provider of choice. That software provider holds a key for them. The client holds a key, and we hold a default backup key in the event that they lose their key or their seed words or they get stolen, or you name it. There could be any number of problems that come up. But by having no single point of failure, it means that that client can literally pass away. And one of the things that we give our clients is an estate plan protocol that they can leave with their lawyer, their solicitor, their accountant, their advisor, their kids, their wife, whoever it might be. And with that document, they can recover the client's Bitcoin or their loved one's Bitcoin, basically jumping through a whole host of hurdles. But this is a process we've been through now 4 times with clients who have sadly passed away, and we've been able to recover every single Satoshi for the beneficiaries. So this is a process I've seen work.
It now. Mm-hmm.
Yeah. And this is where, particularly for our clients aren't looking to buy a little bit of Bitcoin and then learn about it and then buy a little bit more and learn about it. Our clients are typically towards the end of their life, not the start of their life.
And they've spoken to you. They've spoken to you, so they're aping into Bitcoin. Yeah, I get it.
They don't have time.
Yeah.
They don't have time. So they shortcut that or circumvent it by using us.
Okay. And then this was born, because I think some people who have heard of Bitcoin do understand that there's either 12 or 24 words. I find a lot of people will understand that, like, oh, if I have these words, I can get back to my Bitcoin. But I guess, was this born, how did you get to this particular setup? Was it just a client that clearly couldn't manage those words by themselves and it was a single point of failure for a sizable amount of Bitcoin? Like, this was born out of necessity, I'd imagine, the Bitcoin Advisor?
It was absolutely born of necessity. So we helped all of our clients buy Bitcoin, 10 years ago.
Okay.
Or a little under 10 years ago now. And the important thing about that was I didn't want our clients to self-custody Bitcoin and, give them 12 words on a piece of paper and let them walk out the door with their info on a USB. Mm-hmm. I thought that represented an existential risk to my business and my net assets, because if I'm helping someone self-custody their Bitcoin, I feel personally responsible for their success. So either I have to spend a lot of time educating them, and truth be told, a lot of my clients do not have the time or capacity or patience to learn full self-custody. Mm-hmm. So we wanted to give them a framework to self-custody their Bitcoin that had all of the default fail-safes in place that they could never lose their Bitcoin. And it also shifted any culpability on my part to the client, because there's no way of them losing Bitcoin now. So
it helps them, and it was self-serving for you, that you're kind of protected. There's no single point of failure coming from your setup with them. Yeah, got it.
Correct. So it does a really great job of satisfying the Bitcoin maxis to help them self-custody their Bitcoin. Mm-hmm. We've got no control over their Bitcoin, which is really important. But most importantly, the client owns and controls all 3 keys in their setup. So they basically can ask us to do anything they want, and we're obliged legally and contractually to do whatever they tell us.
And now they have pure, scarce digital property that they can travel the world with and access it at any time from anywhere.
Yeah. So I'll tell you a funny story about that. We had a client who was sailing around the Med on a super yacht, and for whatever reason, he had a tax deadline that he had to meet. Now, he went overseas without his key. He thought, I'm never going to need it, don't worry. And he was still able to meet the deadline and get it done in time by using ourselves and the other service provider to co-sign a transaction and get it done.
Yeah, cool. I love it. Super yacht in the Mediterranean. I like that. And just for anyone listening to this, if they go to your website, what is the process like? You select an advisor and then you book a one-on-one Zoom call, and then that first call is the getting to know you and the initial setup. I'm just trying to think of someone who's hearing this for the first time that is going to do a sizable purchase. That would be the process. Go to the website. You can probably choose an advisor, or do you get assigned an advisor, somebody from your team? How does that work?
You get to choose an advisor. So some advisors are really busy, so they've got a fee to book that half an hour or an hour. But you get to choose. We've got some of the best Bitcoiners in town on that website, and I feel truly humbled that, we were talking about a couple of team members before we got on the call, but it's literally a rock star team of Bitcoiners on that team. And you book a call, you have all of your questions answered. If you proceed to go ahead and want us to help, we can send you basically a client agreement. Client signs, returns that, and then we take you to the onboarding process where we help you set up the exchange account. We help you set up your hardware device. We help you set up your vaults, which is basically that hardware device becomes one of your 3 keys. And then we help you purchase that Bitcoin and transfer that into that vault. Once that's done, we prepare an estate plan protocol for you, which is the document that you share with your loved ones on how to recover your Bitcoin if you're not there. And once that's taken place, one of the things that we love to do is actually sit down and talk to the family and show them how they can recover the Bitcoin in the event that the Bitcoin in the family is not there. And so when I say, don't trust, verify, we want to take clients and their family on that journey too, because that's a really critical part of clients understanding that there is nothing they can do to lose this Bitcoin. Mm-hmm. When they see their kid or their wife who's got no interest in Bitcoin whatsoever, being able to move a small portion of their Bitcoin by following a number of steps, it unlocks the ability for clients to then add significant capital to this. Mm-hmm. Because up until that moment that they see that, there's always this niggling fear in the back of their mind thinking that they could lose their Bitcoin, or is this really safe? Have I really done everything I need to? But when you actually take a client on that process and show them through a third party that they love, their wife, or one of the kids, all of a sudden the penny drop is, oh, great, now I know I can't lose it. Most importantly, the kids can't lose it, or the wife can't lose it, or the husband can't lose it. Let's allocate way more capital to it because we want more assets in this than anything else. So that's a critical turning point. The custody is really brilliant, but then understanding they can't lose it is an unlock for helping clients buy more Bitcoin. And
that's cool.
We've had a really interesting thing from a data perspective. On average, clients who work with us in the first 12 months increase their Bitcoin balance by 70+%. Oh,
wow. Got it.
Yeah.
Yeah. Okay. And I tested this out with Stefan, who's one of your Bitcoin advisors, and he's in Italy, or I don't know if he's always in Italy. I think he's most of the time in Italy, and I'm here in Toronto. And he did a beautiful job, I got to admit, of walking me through the setup, and your setup with the multi-sig that I was able to test out. Really seamless, really easy. I've played with a lot of different, hardware devices and different setups. You guys seem to really have a dialed in process. So congratulations on everything you've done, because I know that's not an easy setup to do with the different agreements and stuff that you have in place. So really nicely done on that, Peter. I mean, you don't need me to tell you that. I'm sure you know that by now, but super cool. I want your take on one thing that I share with clients. I try to get to people to see the economy through this framework. GDP is the main influential factors on GDP is going to be population growth, productivity, and debt, or capital, or debt, however you want to call capital, right? Those are 3 major influences on GDP growth. And I kind of explained that GDP always has to go up. Maybe one year it doesn't have to go up, but in general, because of our discussion on debt, you always need it to increase because you need more dollars to pay for all the interest on the debt. So the number has to go up. And I'll go into a bit more detail than that, but that's like the old system. GDP heavily influenced by demographics or population growth, labor, however you want to call it, productivity, and debt growth. Those 3 main influences. And I'm like, we're headed towards a world where the economic output is going to have these 3 influences: energy, which is going to be the cost of doing something; intelligence, which is like the brain or the engine or whatever you want to call it. And intelligence is becoming artificial very, very quickly. I don't know if you played with Gemini 3 yet that was just released. It's like been blowing my mind the last few days. And then the last thing will be proof, because you won't want to trust an institution anymore for your media, your digital signature, your legal documentation, or your money. You're going to want something to be able to prove it is what it is. And in that world, Bitcoin, as the average person who maybe is not going to build a data center or deploy 100 humanoid robots to manufacture things, it touches on all these trends that are emerging from the old system into this new system, where if you believe energy is going to be a trend for the next 5, 10, 15, 20 years, Bitcoin plays into that trend. If you believe intelligence and artificial intelligence is going to be a trend, Bitcoin plays into that as the digital economy grows and we need a digitally native money. And then lastly, proof of work proves that, and in you running your own node, you can prove that you own what you own with Bitcoin. And those three big trends, to me, are just seem obvious at this point, and Bitcoin's one way to ride all these things in a new emerging economy. When you hear, and I don't think I've shared anything there that you haven't heard before, but when you hear me say that, does anything come to mind, or you just think, that's kind of confusing, Tom? When you share
I don't think it's confusing. I love that framing, and I've never heard it put that way so elegantly. So really, thank you for sharing it, because I look at this and I think, back to how do we, what's the outlook look like for Bitcoin? That to me is the perfect framing, because I look at all of those metrics that you put in place for the Bitcoin network are all on an up and to the right curve,
it feels
a dramatic up and to the right curve.
Yeah.
You just look at, say, energy for the Bitcoin network. Look at the hash rate of the network. What was it? 3.5 years ago, it was an 84 exahash. Now it's 1,000 plus exahash. So it's up and to the right. The energy consumption is up and to the right, up to the right. Those metrics are a beautiful scale of looking at and giving a non-financial metrics to the system that tell you everything in that is going up positively. I really love that. And the analysis or comparison to GDP is a really sweet way of looking at that. And when I initially hear that, my initial thought goes to GDP in the traditional sense is cooked. We've kind of, we've squeezed every last drop out of that. It's like trying to get blood from a stone now.
And unfortunately, labor in that analysis is losing. Human labor is gone. Not just demographics, it's like human labor itself. You can see it becoming a smaller, diminishing value of human labor itself. And that's a big thing in that middle metric. It pays all the taxes and it produces the GDP that is required to pay all these debts.
It's sad, and this is where I look at the divergence and the profitability of the major stock indices across the globe. Basically, they're all on fire, apart from this little pullback. And why are they on fire? Basically, everyone's talking about all of the advantages they're getting from AI. There's no AI advantage in any of these companies whatsoever. All they're doing is using AI as an excuse to get rid of all the dead wood, all the DEI, all the shit that's been built up in the system for the last 40 years. They couldn't fire anyone for God knows how long.
Now they can. Yeah.
Now they're saying, and it's a 2-for-1. Not only do you get to halve your costs in the company, you get to say it's AI, so you're now on a different exponential trend. So I look at that and think, GDP is basically cooked and that framework around it, but everything in the metrics you lay out for the Bitcoin network with the energy information. What was the final one?
I'm struggling with the final one a bit. I'm calling it proof right now, because you won't trust an institution for your legal documents or your signature or media or money. Ooh. You'll want it to be proven to you that the purchasing value that you have actually exists. It's not. I'm struggling with what to call that last one, but I'm calling it proof right now for proof.
Yeah, I like that. It's basically trust, right? Because this system is 100% verifiable, whereas that system is, like that old accounting joke. How do you know you've got a good accountant? Ask them what 1 + 1 is. If they're any good, they'll look around and then ask you, what do you want it to be?
Totally. Yeah, totally. Yeah. Peter, I really appreciate this. Is there anything that you want to share that I haven't asked you at this point? We covered a lot in a pretty quick period of time. Thank you for everything you've shared. Is there anything that's coming to mind? You're like, why didn't he touch on this point?
I think we covered the major points. The only thing that I would say that I think is going to be a huge boom for Bitcoin is the Bitcoin bonds.
Mm-hmm. Oh, and you know what? I had that written. Thank you. I had that written down. I forgot to ask you. Thank you. Yes, please share.
I think that that is a huge thing that a lot of people really can't comprehend. And what I think, I'll just have a shout out to Maryland Hoddle. He has done the best work on this that I've seen and continues to just totally crush it. So anything you can look and read that he distributes is fantastic.
Okay, one of his articles is going like viral right now, I think.
Yes.
But yeah, great read. Okay.
Have a read of that, because what the fundamental premise of these Bitcoin bonds is that you can put in, you can create, say, a capital guaranteed bond where you issue 80%, you create basically a structured product where 80% of this product is invested in bonds, treasury notes, whatever you want it. And the remaining 20% is invested in Bitcoin. You staple that together, and now you've got a capital guaranteed bond where you're not going to lose any capital over a 5 or a 10-year period. And they're going to invest 20% into Bitcoin, and the rest is going to be in a bond that, with the interest payments over the next 5 years, is going to return your capital to you. Now, interestingly, if you look at the last 5 years, how this would have played out, if you had $1 billion product in this, you could have created $3 billion of equity in a 5-year period. So that 200 million would have grown to being roughly $2 billion, and you've still got your initial $1 billion of cash that you put into it. So now you have $2 billion of equity in the form of Bitcoin that you never had previously. And this
because
is
the compound annual growth rate of Bitcoin was like 50% or whatever it's been for the last 5 years. And
Correct.
So that's how you grew that amount. Wow. Yeah.
And so what's interesting about this is it solves two major issues. Firstly, the major issue that we had around the collateral, there's no there with the collateral. Well, now all of a sudden we have a bond that started out with $1 billion worth of value. By within a 5-year period, it's tripled in value. So now there actually is a there with the bond that you've purchased. You've effectively tripled the equity in that bond. Huge. Now, the implications for this are massive. And I look at, to your point earlier about El Salvador, I look at El Salvador as basically a test net for the US. And what's really interesting, in the last, say, two weeks, El Salvador had their largest single purchase of a Bitcoin.
I saw that, yeah.
Purchased 1,000 Bitcoin.
Yeah.
What's interesting is, in the last 6 months, the IMF, maybe a little bit longer, the IMF came out and said to El Salvador, we'll give you the money and we'll refinance your debt, but you've got to cut this shit out with the Bitcoin. You're not buying anymore, right? Now, just speculating here, in the last 6 months, in the last 12 months, they've had Matt Gaetz, a friend of Trump and, nominee for the Attorney General, the highest legal office in the country. They've had Don Jr., they've had Eric Trump go down there, they've had a cast of thousands go down and meet Bukele, kiss the ring, see how this is all playing out. And then anyway, fast forward a few months after they've signed the IMF deal that they won't buy any more Bitcoin, they've just gone and purchased 1,000 Bitcoin. I look at this and think we've got something big coming in the US with this strategic reserve that'll happen halfway through next year, I think. Because the US is looking at El Salvador as a test net, much like Bitcoin looks at Litecoin as a test net. We got the Lightning Network built out on Litecoin, and then it got, good enough for Bitcoin to just say, thanks, we'll cut and paste that onto our network. So I look at that and think, these strategic Bitcoin reserve, Bitcoin bonds, all of these products are coming to market. And I mean, to not have any Bitcoin at this stage, I just think is,
Jeez, if Bitcoin gets added in any way to Bitcoin bonds, is it Bitcoin? I never really thought of it, but there has been a lot of U.S. from that administration going down to El Salvador, kind of on the regular.
Yep.
I've been wondering myself, like, why is it? It almost feels weak. Honestly, it feels weekly that I'm seeing someone down there with some announcement or something, visiting, shaking hands. That's why you think in August, before the midterms, big announcements, some changes to the capital markets, maybe something with Bitcoin bonds and a Bitcoin strategic reserve. I
think so, because the way the polls are going,
that is a major. Yeah. Okay.
And so
that's a pretty major prediction you're calling. Like, that's a major, like, the infighting going on now in the US to make this happen would be legendary, historic, huge. And so you think now to do this in August, you think right now in the administration, some of this is happening.
Oh, that's got to be thrashed out now.
Scott Bessent was at, like, I think PubKey opened up a Washington, D.C. location, the bar in New York that accepts Bitcoin. And Scott Bessent was at, like, either the opening, I think, or like a few days later, or he was there. Yeah. This was like last week. And I remember thinking, like, why is Scott, the Treasury Secretary? I mean, I want him to be there, but it is a little bit strange that the Treasury Secretary's at this bar that opens up that accepts Bitcoin that has like one other location in New York, and he's there.
There are no coincidences, is what I'm saying. And we're seeing the same thing. More and more officials with significant power are starting to mull around that Bitcoin ecosystem. And I think for a lot of the interest in El Salvador, it's beyond Bitcoin, because he's basically taken the most murderous place on earth to the safest place on earth in less than 8 years. That is an unbelievable achievement. And I think the West is really missing that law and order that it was famous for. But along with that, the ultimate law and order is Bitcoin.
Mm-hmm. It's almost as if Bitcoin is forcing us to bring back morality or forcing order in chaos.
That's exactly what it does, to your point around the trust. What you just described in my head, I think of as trust. That order from chaos is really being able to trust things. And this is what Bitcoin does on a personal level, then a company level, government level. Yeah.
Peter, pleasure chatting, man. Really, really appreciate this. Thank you very much. The website for The Bitcoin Advisor is thebitcoinadvisor.com, correct?
Yes.
thebitcoinadvisor.com. On Twitter, you can find Peter at Peter BTC Advisor. That's the handle. Anywhere else they should go? Are those the two good places to track you down?
They're the best. Yeah, they're the best.
Peter, thank you very much for this. Really a pleasure chatting with you. You're the first person to tell me that this could happen next year. And just thinking about some of the things you just said, I'm like, I don't know, the probability maybe that I thought was much lower. You're making me think it's a little bit higher than I was thinking, Peter. So we'll see where this goes. But Peter, real pleasure. Thank you for sharing all this. I mean, the time change is huge between us and you in Australia. So really, really value this. Thank you very much. Thank you.
You're welcome. Thanks for all you do. Appreciate it.